Hey guys, welcome back to the channel. Today we are going to make an update for gold again. So what is happening from a higher time frame perspective and from the fundamental perspective. As beginning, we are going to look at the economic calendar for this week because overall it's a very poor economic calendar. The Friday will be a day off. We can see that on Wednesday we have the ADP employment change. It is expected 200K this time. And also ISM services PMI, it is expected to slow down to 54.5. On the other hand, the market is expecting this part here. On the economic front, US ADP employment data will remain in the spotlight, which is expected to decline to 200K from the former release of 242. Contracting manufacturing activities in the economy and lower job openings indicate that firms have slowed their hiring process considering the bleak economic outlook. On the other hand, we may see also this part that everyone is expecting that also the services PMI is seen declining to 54.5 when it was before. And what is very important is that yesterday we saw a very strange movement in the market. Also, the street is anticipating a sudden pause in the policy tightening spell by the Federal Reserves. So everyone is expecting the Fed will slow down with the interest rate hikes. And yesterday we saw this strange bounce to happen here. So all of this wave was very, very strange overall. Despite the fact that I was expecting this movement, I will explain why. But we have to be careful because the bullish optimism is very high at this moment and it doesn't make sense at all. So I will go to make a breakdown for this chart. If we are going to look at gold from a higher time frame perspective that I shared also during the previous analysis, at this point on August 20, as you may see, we had COVID-19. Since when it began here, the top was reached on 2075, and later we can see only a move down in gold. We had during the previous year, the beginning of the year, this was the energy crisis zone, as you may see. We had the war between Ukraine and Russia, and everyone began to buy gold here until March 22. After that moment, gold began the bearish movement again. So this was the part that began the sell. But which was the problem at this point? During March and during this period of time when the price was close to this area, all the economies were testing 40 years high inflation rate. And on the other hand, it was very strange that market moved down related with gold price, and we didn't see gold at all to move and to rise further from this point, considering this is a metal that is used also as a value holder. So this was strange as indication and it doesn't make sense at all. But as we can see, gold moved down. And the bearish movement in a period of time, let's say 40 years high inflation, it was at all-time high. Gold moved down in a period of time of approximately from March that we have here to September, not too many months. Gold moved down by approximately 22% in the period of time of 200 days. So all of this was very strange again. On the other hand, if we are going to look at this part of information, gold began to increase. And when the bearish movement began at this point, we can see that we had the banking crisis that happened on this candle here. So this was the process that pushed the price up again. The problem at this point is that I see that the price is coming back to the top and everyone is expecting Fed to slow down on the interest rates. But overall, it doesn't make sense at all for the price to move through this area, considering that Fed is going to decrease the interest rates. At the end of the day, the decrease of the interest rates means that the lending process will be easier, it will slow down with the interest rates, and the lending will be cheaper for the economy. So it doesn't make sense that a slowdown means that gold will rise further from the previous point. So as long as gold was below 2075 price during COVID, during the Ukraine and 40 years high inflation, it doesn't make sense that now only because of the Fed decision the price should rise further. However, what is happening at this point from the technical perspective, I'm looking at for the price to develop in a 5 wave movement, and the chances are very high that we are going to look at the price to stop close to this area here. If we are going to break this down again, I'm going to break this down on a lower time frame, on the 4 hour time frame. You'll see that we have another 5 wave movement that is already taking shape here. On the last wave, we have this pattern that was completed, this triangle pattern, and it looks like the price is going to explode, but that is not going to happen at all. We have to be very careful because we are close to the end of the 5th wave. So maximum that the price can do is that it can test the zone close to 2075, 2070. This is the maximum that I see, 2060 here. And probably it may begin the bearish movement from here. However, it can begin the bearish movement also before this zone here. We are already, let's say, we can consider the 5th wave completed also at this point, or the price may extend a bit more, but we are near the end of the movement. So let's be careful, let's be patient with this movement. We can never anticipate where the 5th wave will be completed, but definitely we are close to the big bearish wave here. So this is all what I'm looking at for gold. In my opinion, everything that we are looking around about non-farm payroll data and Fed decision probably are just creating a big mess because we are close to the end right now. So let's see what is going to happen. But this is overall what I'm looking at. So hope you guys enjoyed the gold analysis. Please don't forget to follow and hit the like button. Thank you, and I hope to see you all on the next video. Bye bye.